Hey all, good morning. Welcome to ShareTreck. And we're going to get started today with our daily review of pre-market happenings. It's a very interesting day. All the indices and futures are very close to their all-time high. We're going to switch back to the one-day format, where each candle is a one-day and a single window format as well, so that we focus on one ticker at a time. As you can see here, we are very well poised to break above this, and then the chart looks extremely bullish, because if we were to drop down here, then we would have had a triple bottom, and that would have been very bearish. So we have to see what happens. Are we going to just go up briefly and then come back down? Because it seems that the rally is driven more by retail investors. Are the institutional investors going to play catch up by buying on the dips out here and push the index even further up? I don't know the answer. If any of you have any ideas and you have some data, just put that in the comment section so that I can also benefit from what you happen to know. That said, I have a bunch of observations for today before we do the pre-market show. So the first thing I want to talk about is that today is June 25, 2025, and setting the scene before we dive into technical analysis, I observe that S&P 500 is near record high, and that is cautious optimism, at least on my part. The S&P 500 is now less than 1% from its all-time high, marking a dramatic turnaround from just 2 months ago, when the index flirted with bear territory. And I remember saying that this is a dead cat bounce and it's going to come back down again. I was proved totally wrong. And the market has the kind of strength that I never thought I would see. And the other thing I am losing faith on is this long-term channel. I don't think there is any rule that says that the price chart cannot break this channel and go up. Because in fact, in the past, the price chart had broken an earlier channel and come down. So what would prevent it from going up again? So I'm getting really scared about all the shorts I have on the Mag 7s and the S&P 500. I really don't know what I'm going to do. I'm afraid to get into the longs right now, because then I'll get screwed on both sides. So I have a big decision to make. So that's one of the main concerns I have in my mind. And this rebound, I think, has been fueled by easing geopolitical tension, most notably a fragile but holding ceasefire between Israel and Iran, and a sharp drop in oil prices, which has helped cool inflation concerns and kept hopes for potential Fed rate cuts alive. And despite Wednesday's flat close for S&P 500 and a slight dip in Dow, the Nasdaq continues to set new records powered by, if you can see out here, Nasdaq is continuing to set new records. It's broken past all the previous records, and it's powered by strength in tech leaders like NVDA, which closed at an all-time high after its shareholder meeting highlighted ambitious plans in robotics and AI. This tech momentum is a key driver as investors look for growth in an otherwise uncertain environment. Now I'm asking myself the question, why shouldn't I just follow the momentum and be very vigilant in the market and sell at the slightest hint of trend reversal? I should be doing that, but I'm afraid that I may not be on top of the market, and I may not be on my desk when the market turns around. So I'm really scared about it. And the reason I'm scared is because when I project forward, it's good that AI is going to come in, robotics is going to come in. It's not going to operate in a vacuum. There is going to be a lot of unemployment. And a lot of unemployment means many people will not have money for rent, money for food, and money for clothing. They won't have money for many things. What it means is that the politicians are going to be under severe pressure, and at the same time, there'll be social unrest. And it's going to be very difficult if the government doesn't come up with a way of equitable distribution of the productivity and profit gains that come out of AI and robotics. That's a long-term picture. But the way the stock market seems to operate is shoot first, talk later. So I think that that is a case to be made to just follow the trend and the momentum and get into a bit of longs, not the leverage kind, but actually good quality stocks in the semi area, because that seems to be the hot ones. I would avoid S&P 500 because it has got other zombie companies also in it. IWM also I would avoid, but I would go for probably something like NVDA and maybe AMD. So those are the ones I think could give us a little bit more ride upwards. Am I going to do it? I'm still considering whether I have the courage to do that. I'll keep you updated. If I buy anything, I'll let you know tomorrow. But right now, I'm seriously considering. The thought occurred to me yesterday, but I didn't have the courage to do it. And yesterday, I was also busy because for the other channel, we had an interview with Jeff Galvin, CEO of American Gene Technology. And my friend who had come here and kindly given me the cold and sore throat had to go back home to Ireland. So I had to drop him at the airport and we had to say our byes and everything. So I was quite busy yesterday with other things. But today I'm going to take a very close look and actually implement some strategy to come out of this. And I would like to hear from you guys as well. If you have been through any of these thought processes, or if you're having similar thoughts, what is the status of your portfolio? Are you all positive and are you all invested? Do you have enough money to dollar cost average upwards? Please put that in the comment section. And I would say that there are certain things that could kick this market off course, and we have to remember that, because while the mood is positive, analysts are quick to point out several risks that could halt or reverse this rally. One is tariff and trade policy. President Trump's tariff and ongoing trade disputes remain a wild card, with the potential to reignite inflation and disrupt corporate earnings. Then we have fiscal deficit, concerns about the growing US fiscal deficit and the impact of major spending bills are simmering in the background. And then you have geopolitical flashpoints. Although the Middle East ceasefire is holding, any renewed tensions could quickly unsettle markets. And then, of course, you have the Fed policy. Investors are closely watching for signals from the Federal Reserve, especially Chairman Powell's testimony, to see if there is going to be any urgency in rate cuts. And you'll also notice that Trump has been talking about replacing Powell. Of course, Trump doesn't have the authority to do so, but Trump did not have authority to do so many things, and he has done it, and everybody has just bent the knee, and even the courts have given him free carte blanche, if I may say. So I wouldn't be surprised if Trump sacks Fed Chief Powell and it goes into federal court, and then it goes into appeals court, and then it winds up its way into Supreme Court, where probably the Supreme Court might find a way to legitimize the decision to make a narrow judgment so that it can be an isolated one-off instance. So we'll have to see that drama play out, but I think that's where this whole thing is going. Another aspect which is going to start impacting the market very quickly is the ability to use crypto assets while funding a house, especially in the US. I'm making a separate video about that. That's going to give a boost to the housing market. And it's especially good for long-term holders of cryptocurrency. Now, all their holdings are going to be helpful. And one of the other things that's going to happen is that the US government is going to get visibility into all those crypto holdings, which was earlier obfuscated and hidden under various layers in crypto wallets. Now, those things will come into the public domain. So I'll talk about that in a separate video, but that's going to have an impact on the stock market as well. And remember, we are watching a correlation between Bitcoin and the stock market. Bitcoin seems to be moving in tandem with the stock market. So could it mean that now Bitcoin may break out and chart a path higher? Or is Bitcoin going to be pushing the stock market also up? I don't know. We have to wait and watch, and I'm going to do more study on that. I'd like to invite your opinion as well. Yeah, so that's what I'm thinking about. Next, I think what I have is that S&P 500 is within striking distance of a new high. Momentum is slowing, as you can see, and we have the bearish divergence as well. So this is NASDAQ. I'll go to S&P 500, which I was talking about. And the momentum is also slowing out a bit. So one has to be cautious. The next few sessions will be key. A breakout above the February peak could trigger a new high, but failure to clear resistance may lead to a pullback as traders lock in profits and reassess risks. Now, the key takeaways for today, before we go into the charts, is that S&P 500 and Nasdaq are both flirting with record highs, with tech stocks leading the charge, and geopolitical and policy risk remain, including tariffs, deficit concerns, and Fed uncertainty. But the market is not paying any attention to them, and we have to watch for potential breakout or reversal as the market retests resistance at all-time highs. And NVIDIA's momentum and broader AI or robotics themes articulated by NVIDIA continue to underpin bullish sentiment for semiconductors. However, ASML, you will notice, is suffering a little bit because contrary to all of this optimism, an analyst has reduced their chip production, wafer production targets while firming up their price. So we'll talk about that when we go into the price chart. So please keep all of these things in mind, because if the market turns, it could turn on a dime. The dollar index is also moving down, and we have a support out here, which happens to be at 97.288, and right now we are at 97.364. So 97.288 is going to be the support for today, and the resistance for today is going to be this resistance out here at 99.197. Sentiment is bearish, MACD is bearish, momentum is also very weak. So that's what I have here, my friends. And pardon me when I sniffle, because I'm battling a severe cold and a sore throat while I try to get through this live stream right now. So my apologies. I'll try to be as clear as possible without too much of coughing. So the 10-year yield is coming down. Now, typically what would happen is that when there is a global risk factor, there is a flight to safety, and everybody will go into the US treasuries. And when they go into US treasuries, the price of US treasuries goes up, and that pushes down the bond yields. So that's what is happening out here. And the question I ask myself is, when Trump has already threatened tariffs and he's saying that he's going to sack Fed Chief Powell, why should the 10-year yields go down? In fact, they should go up. But that has not happened. So I'm going to be watching this very closely, because this doesn't fit with my narrative or my way of thinking. And I want to make sure that I'm not caught flat-footed. So I'm going to be watching this carefully. This is a fundamental understanding I have of the markets. And right now I'm thinking that US system is not inspiring international confidence, and we have seen a lot of move away from the US. But this is something different. I would have expected yields to go up, but instead it is coming down. And it seems like it's going to go down further. My belief has always been that even if the Fed cuts the rates, if the confidence is not there in the Treasury or in the US economy or in the US policy or the US system, then the bonds will be out of favor, and therefore the yields will go up. So I might learn a new lesson out here and change my worldview. So I'm watching that very closely. Now let's go on and have a look at the indicators where we left them. S&P 500 is poised just on top of this diagonal line of resistance. And for today, this resistance is going to be 6107.71. And if you look at the futures, I think we are already somewhere on top of this. Pardon me, friends, I'm going to sneeze a little bit. Funny. I'm so sorry about the sneeze. It happened. Anyway, so yeah, I think this is yeah, let me come back to where I was. Yeah, so let's go on to VIX. VIX is going down, which is again a good thing, which means the stock market is going to go up. And we have gold also going down a little bit. I would have expected gold to continue going up, but money is going into the treasuries. And I think gold should also get a little bit of the share of that movement, especially because central banks are getting into gold. We'll see when that happens. And QQQ seems to be positive. It's up 0.50% in pre-market trades. And that, I think, kind of takes me through this indicator section. Now, I would like to just look at the put call ratio before I move out from here, which seems to be neutral to mildly bullish. Doesn't tell me anything because I'm not a great options guy as such. Now we have done the futures, we have done the indicators, and let's go on to AI. And in AI, we are looking at NVDA. NVIDIA is up 1.60%, and it has already broken through this resistance of the all-time high of 153.16. This is big news, my friends, and today we are opening way higher. We are at 156.76. What would happen if we close above this? Well, if we close above this, we would have validated this line of support, and then this becomes a support for us, and we'll be building on top of it. And I think at this point of time, I believe that the bearish divergence is continuing to change and give more leeway for the stock price to go up. As you can see here in the RSI, it's almost horizontal. So earlier we had it at a much more wider divergence. Now it has become almost horizontal. I can't imagine how much higher the RSI can go. The momentum is very high. This is a very dangerous game, and it just takes some people to sell and the whole thing could come crashing, in my personal opinion. However, we still have a target that we had put earlier of 162.25. So I'm thinking that probably we are going to ride this diagonal line of support, and over the next few days, we are going to attempt to reach a target of 161. That's what I'm thinking is going to happen. And one of our subscribers was asking me to do Meta. So yeah, it is here, JV. Meta, let us see what's happening with Meta. Meta is looking very bullish indeed. I covered it on a daily basis. And you can see here, sentiment is waning. The bullish sentiment is still there, but it is waning. And people are still indecisive because you can already see that we have the bullish divergence out here. Even if I was to reduce this, right? If I was to take it out here and come on. And if I was to pull this out and make this as one of my comparisons and then bring this here and this here. So I'm still seeing bearish divergence even after making adjustments for the periods. So I'm thinking that Meta is going to be active simpatico with NVDA, that is NVIDIA and AMD. The Mag 5s are moving in tandem, and Meta has invested billions of dollars in AI, so it's riding the AI bandwagon. Personally, I'm mostly in cash, and I'm very afraid to get into this market at this point of time. I might be stupid as well to do that. I would agree, because I'm a retail investor, I'm a retiree, and I have a limited risk appetite. So I'm almost 60% on cash. And I am on longs with NVIDIA, Google, and Amazon. So those are some of the longs that I have with me. I'm short Microsoft, which is hurting me pretty bad. I'm short Tesla, which is hurting me pretty bad. I'm hoping that this particular spike could give me an opportunity to probably dollar cost average on that. But again, I feel very afraid to go further short as the short prices go down. So I don't know what I'm going to do. I'm just going to think very carefully. So with regard to Meta, I have no moves that I would make. So that's what I would say about Meta. If there is any specific question you want me to handle about Meta, I would definitely be happy to talk about that. So yeah, that said, let's go on and have a look at Google. Google is up 1.46%. I have a residual share of Google. It's making good profit. It's accruing good profit. So I'm going to let it ride and maybe dollar cost average a little bit so that I can have more stocks in hand to start getting more gains. That's what I'm going to do cautiously with Google, because Google has got much better fundamentals and much better price to earnings ratios. So I'm more comfortable doing that with Google as compared to with Meta or NVIDIA. Amazon is up 0.62% in pre-market trades, and we have a reverse head and shoulder target of 258, but we are creating some kind of a bull flag pattern out here, and we have to break out on top of it. And today we are up 0.62%. Will it carry further? Because we have a resistance which is going to be at around $216, and we have a support which is at 211.84. Then of course Apple is down 0.05%. Still consolidating. And I read a headline which says that Trump organization has silently removed the made in USA label for the gold T1 phone for the Trump mobile phone business. So if that is the case, I think Apple might get some relief out there because there could be some loosening of laws, especially around narrowly centered around cell phones, and that could benefit Apple. That's the way I'm thinking, but we don't know what's going to happen. Microsoft is up 0.42% in pre-market trades, continuing to ride higher and higher. Maybe I should buy a little more Microsoft stocks because my shorts are getting butchered. I don't have too many shorts. I just have 100 Microsoft shorts, but I think I have to make some course correction out here. But as you can see, there is no bull flag or anything out here. It is just going up. It has not started creating a bull flag. So it could drop anytime, and that drop may or may not end up being a bull flag. That's my fear. Now, next, let's look at Tesla, which is up 0.08%, and it has got a resistance immediately at 329.86. Right now, it's at 327.82. And it has got a support, which is going to be the 9-day exponential at 329.86, 329.65. I think pre-market trade tries to show to us that this is going to be above that. So 9-day exponential will end up being a support. So for the moment, for the sake of clarity, let us assume that the 9-day, 21-day, and this horizontal line of support at around 329.14 is going to be resistance. And the support is going to be this line out here at 297.94. And then you look at Oracle. Oracle is up 0.51%. It's still below this line of resistance from the recent past. And we had created a bull flag and we moved up, but then we couldn't go past this resistance. So Oracle is literally struggling to make new highs. And we'll have to see how much confidence the market has to invest further and push this up further. This is like all-time highs, and sentiment is absolutely bullish. MACD is also bullish. RSI is cooling up, but it is still overbought. So we could consolidate further today and then make a move up if NVIDIA goes up further. AMD is up 2.92%. This is absolutely fabulous. Our resistance, which was at 143.81, has now been converted into a support, and we are moving up to touch new heights. And I think that our resistance is most likely to be somewhere around 152.72 on the way up, and our support is going to be at around 143.54. SMCI is also moving up smartly at 2.08% gain in pre-market trades. Our support is going to be 42.72. Our resistance is going to be 50.59. And we have got Broadcom, which is up 1.07%. And the resistance that we happen to have at 250.06 has now become a convincing support. And the 9-day exponential sitting at 255.66 is going to perform the role of a support today. That's what we have here. RSI is overheated, it's overbought, and MACD is just about turning bullish. And bullish sentiment, which was waning, is starting to pick up a little bit in simpatico with the NVIDIA rally, boosted by Jensen Huang's statement about the next one being robotics, and NVIDIA is going to do a lot on robotics and AI. So people have given a vote of confidence to Jensen Huang because he has delivered so far, and his most audacious plans he seems to be able to deliver. So that is what is giving legs to the rally that we have right now. Palantir is up 1.34%. Again, Palantir is continuing to move up. There was this bull flag out here. So this is the flagpole. This is the bull flag. And the target out here is 161.33 for Palantir. That's what I think we are heading towards. And our support is the 9-day exponential at 139.19. SMH is up 0.97%, riding this diagonal line of support. And I'm going to pull this line of support further up so that we can see that it's going to be at around, I think we're going to get support at around 274.79 for SMH today. And I don't see any resistance because I have a couple of targets. One target, intermediate target is 280.59. Final target is 303.98 for SMH. Whether it will happen or not, I think the fundamentals that I look at, the geopolitical situation and everything, it's as messy as ever. But if you look at the charts, it seems that we are keeping on defying even the technical bear signs and moving up. So I don't know when it's going to give. Remember, we are already very close to and probably surpassing all-time highs. So something's got to give. Tempus AI is up 1.12% in pre-market trades, and Rigetti continues to go up at 2.43% this morning. We still have support, which is going to be 9.82, and resistance is the 9-day and the 21-day exponential at 11.37 and 11.52 respectively. Pre-market we are at 11.36. And AV continues to make its move up. Did I follow my own advice and buy the stock? No, I didn't. And I had put a target yesterday of 229.13. We exceeded the target today. And this is based on a positive catalyst sales guidance of 1.92 to 2 billion. So I should have put my confidence on technical analysis out here. I didn't do that, but that is still the second target I have, which is going to be 245.77. I believe we are heading towards that, and we'll see how it goes. But I am chicken at this point of time, and I'm really paralyzed with fear. I don't know what I would like to do at this point of time because everything is on a razor's edge. TSLQ is up 0.17% in pre-market trades. And then, of course, we look at Genomics. Prime is down 0.83% in pre-market trades. Intelia is up 0.10%. Caribou is up 3.52%. Beam is up 0.95%. Altimmune is down 62.32%. I know the reasons why it is down. I'm going to talk about that in a separate video later today, so please tune in for that. I'm going to draw that video up in maybe a few hours, assuming my throat allows me to record. And then we have had some targets of $9 and $8.69 for Altimmune, but I'll have to reevaluate all of that because I think that the market is focusing on certain aspect of the study results which were not statistically significant. Is it worth putting overemphasis on those factors? That's what I'm trying to figure out. So watch out for that video. Valve is down 0.89% in pre-market trades, again consolidating out here at the higher level. Editas is up 0.91% in pre-market trades. Illumina is up 0.40% in pre-market trades, beautifully moving upwards, support from the 9-day exponential, and this huge area of support, which starts somewhere around 89.88. CRISPR also is moving up by 0.86% in pre-market trades. Support is going to be at 46.30, plenty of golden crosses happening. So it's all looking pretty good for CRISPR Therapeutics. All of you CRISPR guys who have been waiting patiently for a long time, now is your moment to shine. Allogene is down 0.81% in pre-market trades. Grail is up 1.14% in pre-market trades. Nicely riding along this diagonal line of support. And for today, I think the support is going to be this horizontal line of support, which happens to be at 45.65. And then we have PACB, which is flat in pre-market trades. RG is up 0.16% in pre-market trades. In my opinion, we are forming a bullish pennant, and we have a support from the 9-day exponential, and that is sitting at 23.83. So it has to break up if I was to make a guess on that. But markets can do anything, so we have to be careful about that. Vertex is doing very well. It's up 0.29% in pre-market trades, still has a resistance, which is going to be at around 449. And Ginkgo Bioworks is down point out here. And this is what it's going to be. I think we were briefly disconnected, so I'm back again. Let us see where we are. Okay, so this is a new target I have for Eli Lilly, and that's going to be 893.60, purely based on technicals. Sentiment is also bullish, MACD is also bullish, momentum is also above average, and we have earnings coming up on 7th of August. In the run-up to earnings, I think we may start picking up, and we'll see where it goes. So I'm going to ride on Eli Lilly and continue holding on to it and see where it takes me. I've already booked some profit on Eli Lilly, so I may think of dollar cost averaging upwards and take some profits. So that's all I have, my friends. And if you have any questions or comments or any suggestions for investments, please mention that, and I'd be really happy to cater to that. So that kind of brings me to an end of today's session, and I'll catch up with you again at at a later time with some videos on autoimmune and their data release